Hi, Nathan. Welcome to another Spotlight, Expert Spotlight. Nathan Maisey from Maisey Harris Co in Hamilton. Accountants to the stars. Xero Partner of the Year, 3 years running. Must be a proud man.
Yep, that's pretty awesome. Good to be here, Douwe, and share a little bit of an insight to all your viewers today.
Yeah, awesome. What we're all about, we've been working together with a number of clients, and where we share the business advisory and the accounting. In terms of accounting, it's around management accounting and active, sort of having reporting done really quickly and on the ball, right? An accurate type of forecast and so on.
Yep.
So I thought today would be a great opportunity to see, how far people can get on their own, and where the power lies in numbers. So Nathan, what are we going to be talking about today?
So I guess there's probably two parts, Douwe, that we see really good businesses do. And the first thing is, really good business managers or owners or business people in general are good at setting goals and having a plan to do that. And the second part of that is they're really good at knowing their numbers as well. So knowing your numbers is probably the piece I'm going to talk to you about today, and I'm going to show you some just little tips and tricks today about what reports you should be running as part of your normal business as usual processes, either monthly, fortnightly, quarterly or yearly. You should be running these reports as a minimum, and then I'm going to really quickly talk to you about why you should be running these ones. Then we're going to move into really quickly, if you've ever thought about doing your own budget or giving it a go yourself, I'll show you how to actually load a budget into Xero, and perhaps create a forecasted version from that as well, like a flexed version as you go through the year, which is also really good, because it's one thing having a snapshot at the start of the year, but actually being able to flex that as you go through the year, and as things change and go up and down, you want to be able to update the forecast as you go as well.
Awesome, mate. Let's get straight into it.
Okay, cool. I'll just share my screen then. Okay, can you see that, Douwe?
Yeah, mate.
Okay, awesome. So this is just a demo company that we use, guys. It's pretty straightforward. It's got some pre-loaded data in there that we use for a lot of our Xero trainings. But so to kick it off, I think the three reports that we believe you should be running fairly regularly are really simple reports for us as accountants, but a lot of business owners, sometimes struggle to understand what the reports are showing. So the first one is this profit and loss report. And how you get to it is it's in the accounting tab. And it's even favorited there as you saw me click on it. And just a really good report that you can run either monthly. You can see it defaults to monthly. You can compare different periods, so you could do this month versus the same month last year, and so on and so forth. So really get some data in there, and then you can start to analyze what the figures are doing. And I suppose the key thing about the profit and loss report is it really does illustrate your performance as a business. Okay, so how profitable are you? And when we think about what a business's purpose actually is to provide for the shareholders, so when we think about what we see really successful businesses do, and what our own core purpose is here, is it's to help businesses or people leverage their businesses so that they can do the things that they love. And I know Douwe's big on that. So he's about loving your business, and we're about loving the business so that you can go and then do things that you want to do as well. So we talk a lot about mind freedom, time freedom, and financial freedom. And I guess having these numbers here in Xero, these numbers are live, it really can tell you about the performance or the financial freedom and the stress mind freedom that you can get from running a really good business. So I guess the thing to note in this report mostly is the net profit figure down the bottom. A lot of people talk to us about how their revenue has grown, and we talk about revenue being vanity, but then profit is actually sanity. Okay, so that's the most important part. And I guess the thing to take away from this report is that you can drill down into all these figures here. So you can see my cursor over that one there is actually hyperlinked. So if you do have questions about what is in those accounts, you think, oh, that seems high, why is that? Well, then I'd encourage you to drill down on it and actually really dive deep and have a look and get a really good understanding for what your numbers are showing. So in the interest of time, I won't go too much deeper in that one, but the second report I wanted to show you is this report that we refer to as the balance sheet. And when that one loads, you'll see that really what the balance sheet shows us is the balance sheet shows us our assets, which is this top part here, and then our liabilities. So it's what we own versus what we owe. And quite often you will hear a lot of people talk about profitability of a business, and while that is incredibly important, and you should know the profitability or the loss situation of your business, the performance, having a strong balance sheet is even more essential than having a profitable business, because having a strong balance sheet means that you can weather storms. You may have assets that can be sold if you need cash, or you then know what assets you need to generate sales as well. So then it's also really good to understand what you owe other people. So how the balance sheet, I'll just try and move that out of the way a little bit, but how the balance sheet differs to the profit and loss report is that the balance sheet takes things as a snapshot. Okay, so really when you run this report is saying, as at the 31st of March, this is the cash that we had in the bank account. Okay, so the reporting parameters are a little bit different from a profit and loss report, which is more of an accumulative approach report, whereas this really does take a picture at one point in time and tells you how healthy your business is. So why it's important is that we know that we need to have more assets than liabilities if we want to have a strong balance sheet. Okay, and so things like bank accounts at the top here, you've got accounts receivable, so that is a really important figure to keep your thumb on, because that can actually, converting that into cash is really important. Okay, so we talk about cash flow being king within businesses, and knowing how quickly you can turn your sales into cash is really important. So monitoring what those figures are. Of course, you do have your fixed assets here, and then of course then we take away all of your liabilities here. So those are things like the taxman, GST, income tax, accounts payable. So those are potentially people that you owe. This is when we've brought something but we haven't yet paid for it, right? So that's really important to keep an eye on those figures too, and just really get an understanding. Of course, with these ones you can deep dive into them, just like in the profit and loss report. So that's the balance sheet at a glance. Of course, you can set your date parameters up here, set some comparison periods if you want, and hit the update button. The third report that I talk to a lot of my clients about is this report, and it's hidden in the report section here, and it's called the cash summary. And why I love it is because it really it shows us the performance of a business from a cash perspective. So a lot of clients will come to us, and in their mind, they understand business as a cash in and cash out. And then when accountants talk to them, they are talking from an accrual-based accounting mindset, which is basically, even though you've done a sale and you haven't been paid for it yet, we still classify that as a sale, right? Whereas a business owner potentially might not classify that as a sale until the money is in the bank account. Okay, and that's why it's so important to distinguish between, accrual-based accounting, which is how profit and loss reports and balance sheet reports are prepared, and cash accounting, which is why this cash summary report is so good. So if I just change it here for you to say April.
And I notice it's excluding GST. So that's line up with some of the profit and loss figures. Yep,
absolutely right, Douwe. Thanks for that. So you can see here we've got the month of April. It's comparing it to the average every month. Of course, that's only taken the last month, but you can choose to compare it with a previous periods if you want to. You can toggle GST on and off if you want to. We just traditionally do it excluding GST. And so there we are. I might just chuck in a year to date there to show you that you can have a summary column there. And so what you're looking at here is true cash in and cash out. And why I love this report is because it makes talking to clients easy. You've got your cash coming in at the top. You've got all of your cash going out as it's been paid. So these have been physically paid and received. It then gives you an operating surplus or deficit. It allows for things like asset purchases, right? Which is a massive thing when you're talking about a profit and loss report. That does not take into account an asset purchase, right? Whereas this cash summary report really does take those things into account, which is so crucial for a business owner to understand that. Then, of course, you do have GST movements here. Okay, so GST on things you have purchased is sitting in this account, and then GST on sales that you've received is sitting in this account here. And then it's saying, well, hey, you'll have GST movements of 1,100 on those figures. So all of that basically combines to give you a net cash movement, right? And why I love it is because you have your opening bank account balance of 10,200. It takes into account the money in and money out for the month, and it gives you a closing bank account balance there, and that reconciles to the balance on your bank account.
Bank account, yeah.
Yeah, and that's why business owners really love this one, because they can relate to it. You know, it's cash in, cash out, so it's real. So that in a nutshell is probably the 3 reports that I think every business owner should be running on a regular basis. And if you want to learn more about that, or if you get stuck with this, then maybe it's a chance for you to reach out to us and get some assistance for that. I probably want to move into if you've ever thought about doing a budget, and we believe that every business deserves a budget or a forecast, and I know Douwe's quite big on this as well. It's a form of financial goal setting. So budgets in Xero are hidden in the accounting tab and then reports. And just down here, the second line, you'll see budget manager. Okay, so click in there and that will take you to it's a crude budget creator, but it really is quite effective. So what you can see here is this top part here is where you will set all of the parameters for the budget you want to set. So for example, at the moment it's set up to say, okay, we're going to do a 12-month budget. We want 3 months of actuals in there so that we can, you know, at least make a pretty educated guesstimate about what our next 12 months is going to look like based on some actual figures. And it's going to start in April 21. Okay.
And the actuals are ahead of the 12 months, Nathan?
The actuals are the leading, so they lead up to the 12 months.
Okay.
Okay. So in this example, you can see January, February, March 21.
Yep.
And then we'll use those figures to guesstimate or actually estimate what our next 12 months might look like.
Yep.
So there's 2 ways to build this budget, guys. The first way is that you can actually do it in Xero using these cells here. So you can see here, I've got 7,000 in here. I can write in 6,000 in the next month in May 2021 for sales. I can then go ahead and use that to apply that same figure across the remaining months. I can adjust it by, say I want to increase my sales by $500 a month, or I can do a percentage increase as well. And so if I apply that, you can see straight away that Xero has done the hard work for me, and it's just extrapolated that right out through to March 2022. Okay, so that's one way to do it. And of course, building a budget is not that quick. You really do need to think about certain things. I guess the benefit here is you've got all of your accounts down the left-hand side. So, you know, if you've spent money,
it's pretty hard to forget anything. Yeah?
Yeah, exactly. So and that's why it's important to put these actual figures in here, because then you'll know exactly what you've spent in the last 3 months. You could widen this out to 12 months if you really wanted to get a good view of the previous 12 months to make a good forecast for the next 12. So you can see all of a sudden down this left-hand side, I've got a heck of a lot more account codes here, because that's where they've all got figures in them. So then you can choose what you want to do with this, is, you know, populate it out that way for the future based on what you know you've spent in the past 12 months. And as accountants, that's traditionally where we would start, is what have you done historically? You know, that's a good example of what we might expect to happen in the future. But if you're making some significant changes to your business, you go ahead and you buy some new equipment and you know it's going to make you more efficient, then you'll be able to get more work done during the day or the man hours or whatever the case might be, and you can start flexing and changing these sales figures accordingly, right?
Yeah.
So that's the first.
If you got some significant sales, there was going to be some expenses also that sort of.
That's right. So if you know there's going to be some significant expenses coming up, like your insurance renewals or those sorts of things, you can chuck those in there if they have to be paid in a lump sum. That's quite a good way to do it. So that's the first way to populate this budget in Xero, right? It's pretty important to remember that you do need to hit the save button when you're doing it. And that is saving it as our overall budget, right? You do have an option in here to add new budgets, and I'm going to talk to you about that in a second.
Can you change budgets later?
Absolutely.
You're going to have a few goes at it. That's okay.
Yep. Absolutely. Yep. So I'll talk to you about that in a second. If I add a new one here and I call this one, this is our 2022 version 2. Okay. Then we save that. You can see that I can now toggle between overall budget and our 2022 version 2, right? And in 2022 version 2, I can go in and I can still change these figures.
Yeah.
Okay. So that's important to note. When you're building a bigger budget, this can actually get quite time consuming doing it this way. And that's why in the past, how I used to, sorry, I'll just move this thing out of the way. I can't see it. You might not be able to see it at your end. In past years, I've always done it in this way here. So basically you can use this export button and export it in a CSV. And that way you can go ahead and manipulate the figures really quickly. You can apply all sorts of formulas to them. And then save them down as a CSV again for it to easily upload back in. Okay.
So the formulas are, you know, when you're looking at historical percentages or things like cost of goods percentages, for example, or gross margins, you're trying to work it to a certain answer.
Absolutely. So if I was to go here and let's say, for example, I wanted to copy that and I wanted to paste it across all of the remaining sales. So I'm going to do the same sales every single month for the next 12 months. It's quite unrealistic, but that's what I've put in there. And then like Douwe is saying, this is my purchases line here. If I just scroll back over, you'll be able to see that's my purchases line. So traditionally what we might do is we might go, okay, well, our purchases are 30% of our sales, all right? So we could now put in a formula here where we go equals that figure there times 30% and hit the enter button. And then we would just drag that all the way along to get that to work out our purchases figure as a percentage of our sales figure, okay? So that's why this method of building the budget can be a bit quicker. It's a lot easier to do formulas and stuff like that when it's like this. So getting it back in there is pretty simple. So hit the file button and you want to save as. Make sure it's a CSV, okay? And then it's called demo company file and it's in my downloads folder. So I'll hit save there. I'll replace that existing file, close that, get back into our budget manager, and I'm going to now import that file. Hit the browse button. Go back, oh there it is right there. My download folder. Hit open and go import. So there we are there, 33 accounts with updated budgets. So we're going to confirm that that is correct.
What does that relate to, this 33 account?
What was that, sorry?
What does it relate to, these 33 accounts? Or is it just 3 liner?
Oh, that's just saying that 33 of these fields now have figures in them that didn't have figures in them before, if you know what I mean. So now what you can see is I've just imported this budget. It's got my purchases here as a percentage of my sales at 30%, which is exactly what we said.
Yep.
So that's the second way to build the budget, right? Now, it's not much good having a budget if we don't do anything with it. So the most important thing about having a budget is actually making sure we get into a regular habit of comparing it to our budget. So
there's a little screen in front of your Xero.
This one?
I think there's a little pop-up there.
I'll move that out of the way, shall I? Is that better? I can't see anything on my screen. Okay. Is it yours?
Yeah, yeah, that's not.
Okay, I'll keep going.
Yeah.
So then the most important thing is measuring your performance to this, the said budget. Okay, so we set some goals that we wanted to achieve. How are we going with that? And we should be looking at this at least once a month at the very minimum. So the way to do that is to run yourself a profit and loss report. And very simply, it's about going in here and saying, okay, well, let's compare the month of April 2021 and we're going to compare that with our budget for 2022 version 2. So I'll just hit update there. And you can see there, I mean, I didn't put any other figures in that budget for overheads, but you can see here, here's our sales figure of 10 grand, and then there's our purchases figure as a percentage of the sales at 30%. And you can see how we have performed in the last month, right? So yes, absolutely awesome. We smashed the sales figure by about 5 grand, or just shy of 4.5 grand, and we're up by 42%. So I love this report because it's very much green and red, okay? So it makes it easy for you to identify where there's some issues. Obviously, there's some issues here because we haven't got any figures in the budget for the overheads. But what is also good is that you then have these year-to-date figures as well. So as well as having a budgeted figure for the month, you're then accumulating that figure all the way through the year is what the year-to-date columns are. So if I ran this report at May, these columns would be April and May together, whereas these columns here would be just May, just the month of May.
Yep.
Okay. So this is awesome. It's a great report if you are reporting to the bank or anybody that's helping you with your business. And I suppose if nothing else, it's just one of those important pieces for you to know your numbers and really identify where your strong points are, where you fall short or fell short of your goals, and what you can do differently in the next month as well. So building on that, for the last bit here, Douwe, I noticed we're running, how are we going for time, mate?
Pretty good. Pretty good.
Okay. So in the interest of time, I will just quickly talk you through how you might like to make a rolling budget, and it will be purely hypothetical for this example, unfortunately, but if you do struggle with this, then maybe it's an opportunity to reach out to us and see how we can help you guys. But I would be in here creating new budgets, okay? So at the end of a year, you might end up with 12 or 11 new budgets in here, because you would have your overall budget, which you set right at the start. And then every month you would be building a new budget, okay? Knowing what you know now that you didn't know a month ago or 2 months ago or 3 months ago when we built this budget. And that is where you can add a new budget.
Can you copy the previous one? You know, if it was pretty applicable to that date.
Yeah, well, the way you would do that is you would have to export out. So say we were going to do this one, we would export the version 2 out, right?
And then save it as a new version.
That's right. Save it down as a new version. Then create yourself a new budget in here. I'm going to call it, say, June rolling. Put a year in there. June 2021. And then it's important to note the actuals in here. You would want your actuals to be 3 months. Period for 12. Period would now be, let's see what this does, guys. So that would leave us with April.
So why is that, Nathan?
So what I'm trying to achieve here is to get our actuals in there. So say our actuals for April and May, and then we want to actually adjust our June figures moving forward.
Okay.
Okay, and that's what a rolling forecast would look like. Obviously, you set a goal for April and May back at the start. Those months have now been gone. So now it's about flexing what we know is going to happen in the next few months. And there may be cases where, hey, your business is not at a point that needs to change figures into the year. We simply just want to achieve sales growth of 10%. You know, like that's our main goal. And that's quite easy to plug in there as a budget. But if you know that expenses come up or there's legislation changes which are going to cause you know, larger expenses to your overheads, you'd want to start building those into your budget, right? Yes. And I guess what that does is, as you go through the year, you then have two things that you're now reporting against. You're now reporting against your original budget, how you thought things were, you know, 2 or 3 months ago. And then you also are reporting against your rolling budget. So it's your actual figures versus what you thought a revised version of those would look like. due to changes in the environment, due to changes in the government, due to changes in the economy, all sorts of stuff like that. And so that's just the next level of probably what we would call budgeting and forecasting, is creating that rolling forecast. And it's much easier to do, as I said, by exporting the file out, copy the last one like Douwe was saying, and then import it back in with on the new budget here of June 21 rolling, and so on and so forth. So you may at the end of every year end up with like 11 or 12 rolling budgets as you move through. And so I guess in summary, that is pretty much it. So we've covered off, I guess, those 3 reports that I believe every business owner should be all over, absolutely understand how to read them. And if you don't, then seek some help and get some learning under your belt about how to read them. And that should be part of your habit every single month, to be looking at those numbers and knowing your numbers. And then I guess as part of that profit and loss reporting, it's always really good to have a budget or a forecast in place that you're comparing your performance to. So if you've got your financial goals that you know what you want to achieve, then you can do that within Xero. You can plug in your sales targets, your expense targets, and all the rest of it. And you can compare it against those on a regular basis.
Oh, that's awesome. You know, you make it sound really appetizing, Nathan. Sure. Maybe for some people saying, okay, a rolling budget, now we're starting to go a bit crazy. We haven't even got the annual budget in, let alone a rolling one.
Yep.
Right? It's just
Sure.
more like, for me, it's more if that is actually needed, yeah, to have another, if things change that quickly, to be able to have other forecast. Cash flow forecasting, is that something that can be helpful here?
Yeah, so we talk a lot about cash flow forecasting. I guess Xero, the software, is a bit limited in its functionality, that we can't actually accurately forecast cash flow without a whole bunch of manipulation on Excel spreadsheets and stuff like that. So we have a separate software called Spotlight Reporting that we use internally, and that's how a lot of our clients, when they need a cash flow forecast to help them set some goals or help them achieve some financial targets, and even if for some bank funding, they need one of those, then we use Spotlight to generate cash flow forecasts. And we talk about cash flow forecasts as being true 3-way cash flow forecast, right? So that's your budget, which is the piece that we've talked about making in Xero. So your profit and loss budget. So what is your performance going to be for the year? Then it takes into account the second piece, which is a balance sheet approach as well. So it's forecasting what your balance sheet is going to look like at the end of every month. You know, how long does it take for you to get paid? What tax are you going to need to pay? What assets are you going to need to achieve the sales targets you've just set in your profit and loss budget? And then those 2 things feed down together to the final cash flow forecast, which says, okay, well, the cash in and cash out from those 2 other reports will look like X, Y, and Z. And then we're going to have GST payments in these months, and we're going to have loan repayments in these months. And so that is a true cash flow forecast. And a lot of people find that quite empowering having that, because what I love about it is it's a lot like that cash summary report that I showed you, but it reconciles to the bank account balance at the bottom of the report every single month. And so if you hit your targets in revenue, you hit your cash flow, your debtor days, your creditor days, and then you hit your targets for expenditure, it is highly likely that your business will actually achieve those targets down the bottom in the bank account.
Yeah. Do you find sometimes people don't really want to know the numbers?
Yeah, that definitely happens. I think that the most successful businesses that we work with, they have an understanding of their numbers. They might not necessarily be able to tell you exactly what their profit was last month, but at the very minimum, they have an understanding on what products are their most profitable things that they need to be selling, you know, who their highest performing team members are, all those sorts of things there. That's, I guess, at a higher level, what I talk about knowing your numbers, kind of things that really good business operators can put their finger on pretty quickly.
Yeah.
And I guess what I've been trying to talk to your viewers about today is gaining that understanding of knowing what the numbers mean, because that's the first step in really starting to know your numbers. You know, it's creating the habit of reporting those figures so that you get in the habit of actually understanding what changes you make are doing to your numbers.
Yeah, this is very good. Thank you, Nathan. Setting a budget is always better than not setting any budget, right? And setting some,
Absolutely.
resetting some budget is even another step better. Knowing what you got in the bank and where it's all going and how this is all going to pan out, right? It's major stuff. And sometimes if it's not that that good, then it's still better to know what you know than not know at all. Yeah.
Absolutely.
So this is about people growing their business and taking some control over some of these things, right? And some good reporting systems actually come with that, right? And to be able to find relevant, what do you call it, a relative, you know, this is reasonably doable for some people, right? Smaller businesses, perhaps a bit bigger. It's you might need some assistance. Yeah. Yeah,
and this is sort of a do-it-yourself type of approach, right? So that's at the basic level. I think what business owners should be looking at. And if, like Douwe says, you know, you guys are not that interested in diving into Xero and having a look at the numbers, then you need to create the habit of at least learning about your numbers. And so maybe you can outsource the preparation of these reports to somebody else. I mean, that's what we do for a lot of our clients. That's proactive accounting, is preparing management reports. And so if you can get somebody else to do that, then the value comes or is around wrapping a meeting or something around those numbers. So having a board meeting or an advisory meeting where you actually talk about the numbers and the effect that the changes you're making have on your business.
Yeah, awesome, Nathan. I'm sure we'll talk again soon. Cool. And thank you very much for this explanation, and people will know how to get back hold of you. Maisey Harris Co from Hamilton, Xero Partner of the Year, 3 years running.
Thank you, Douwe.
Okay.
Thank you very much. Okay. Thanks, guys.
Bye-bye.
See you later.